Okay, so these are some of those measures that we just talked about. So let's look at some of the most common benefits. And I'll try and go through where there are exemptions, where we can save some money rather than go through the ABC of how you work out fringe benefits tax for motor vehicles. The key benefit to have with a motor vehicle is an exempt vehicle. The reason being is that if I drive from home to work, that vehicle is classified as private use. It's private use, therefore there generally shouldn't be any fringe benefits tax on that vehicle. So what cars does that apply to? There's what they call exempt cars, and these are cars as defined here. Typical is your Ute. You've got dual cabs that you hear about. And there's vehicles that are not cars, and they're designed to carry more than 1 tonne. So your typical example are your Utes. So you can go home to work, no fringe benefits tax. And look, I know of a lot of, whether they're clients and friends that work in all types of organisations, from hospitals through to schools, that package dual cabs because they're exempt vehicles. Motorbikes as well. Buy a motorbike, you go home to work, it's all classified as business travel. However, the tax office don't like it, and they have issued 2 rulings last year. Dropping a spouse off at work. In this example here, so the key to have these exempt vehicles is that you only really do what is business travel, and they give you an exception, home to work being business. So what is not business? 2 IDs, dropping the spouse off at work. In this situation, there was a husband on his way to work, and at the red light, the wife would jump out, maybe he drove in, I'm not sure, and she would jump out, and then he'd continue on his way to work. Now, was that actual still business travel because it was from home to work? Or by dropping off the wife, has he broken that connection? Well, according to the tax office, he's broken the connection. That journey from home to work is no longer deemed to be just private business because he's broken it. However, there is a subsection to the rule that states it needs to be minor and infrequent. Luckily enough, he only did this once during the year, so it was okay. Dropping the child off at school is another ID, and there's one missing there, which I haven't put down, it's number 97, similar situation. In this case, only one time during the year, which I find hard to believe, you dropped the child off at school. Again, that was deemed to be broken that trip, so it was, potentially could have been business, would have been private travel, but it was only one time, so it was minor. So it's a very grey, so how many times can you do it? Can you do it once a month? Can you do it once a fortnight? I don't know what the rule is there because it is very grey, but my warning would be that if you do have these dual cabs or Utes, just be careful how you utilise them and try to ensure that you're using them mainly for home to work. If you're the employer, get a declaration. Make sure you've got some supporting documentation that state that the employee is using them only for home to work. And if they're not, and it's found out that they're not, then they must package that FBT and pay that, or there must be some sort of clause in their contract to state that. And another example, and I don't know whether this is an urban myth, but I'm told it's not. The ATO don't like Utes, and they clearly said it's on their website that they're data matching for vehicles that were acquired for more than $10,000. They're data matching that with RTA records that are registered in company names, and they're looking at those to determine whether they've been shown on their fringe benefits tax return. And there was talk about a situation where the ATO officers went to the local football field, took down all the number plates of all the Utes and did a cross-matching with the Utes with the registration, then with the company returns. That part is the urban myth. The other part is actual fact, but they don't like them and people are rorting them. Now over in New Zealand, they've got a different rule with their Utes. You're required to actually have your logo or whatnot displayed all over the vehicle for it to be exempt. Over here you don't have to, hence it's utilised quite a lot. Now with the valuation methods, yes.
Surely you're talking about Utes under or over 1 tonne?
If it's a car, okay, a car is less than 1 tonne, so it could be a Ute that is designed to carry less than 1 tonne.
So that's a car?
That's a car, but the business travel is still, home to work is business travel.
Yeah.
A non-car is something that is designed to carry more than 1 tonne. And the difference between the two is how you work out what happens if you do business, if you do private travel. If it's a car, then potentially all that travel from home to work is ignored because it's now been used for more than just a minor trip, and you go back to your statutory formula or operating cost method, in which case probably 100% will be then private use. If it's not a car, then you use a cents per kilometre rate times it by the private kilometres. So just a different valuation method. So the valuation method there you can see. Another one, if you're looking at trading in your vehicles or your staff, don't forget that you reduce the value of the car for tax purposes by 1/3 once it's been held for more than 4 years. People forget about that, they traded it in and they could have saved quite a substantial amount. And given the price of second-hand cars nowadays, it might be worthwhile holding on to them. You may also want to hold on to them because under the rules that value the cars, you can see there, you may be under the grandfathering provisions. So only if you bought a car after, what's the date there? After the budget announcement, which was 10th of May, there we are, then you'll be in these rules. But if you had an existing car, you may want to stay in these rules, especially if you're doing 40,000 kilometres a year. Again, don't forget, if you have employees or your employee, if you're paying for petrol, that can reduce, and you're not having that reimbursed by the employer, that can actually reduce the taxable value of the car. So it's a good idea to add up all those receipts and they can actually be utilised to reduce tax. People often forget about that. When you make an employee contribution, often there's a strategy, unless your tax is really at a high rate, you may want to make an employee contribution towards the value of your benefit. When you make that employee contribution, that contribution must, there is GST attached to that. There's a part of the tax return when the tax return is prepared that you show employee contribution, and that needs to match up with the fringe benefits tax return, and that's what triggers audit generally where they don't. So this is just for your own benefit, this is how you utilise the statutory formula. Probably utilise 80% of the time, but again, you may find that using the operating cost method is now going to be more valuable than utilising this. So you work it out, you say the cost of the car is $40,000, travels 24,000 kilometres, therefore the rate you use is 20%. So the taxable value is $8,000, you gross it up through this factor, you get $16,000 and you apply 46.5% tax because that's your FBT. So your tax that the employer would have to pay or the employee would have to package would be $7,680. Now when I say the employee pays or the employer pays, it all depends again back to the contract. If you say you're on 100 grand plus we'll give you a fully maintained vehicle, then the employer will be picking up that tax. I've thrown this chart here, probably a bit clearer on here than it is on your slides, but that's just an example of someone on a package and the various statutory rate and how much they can actually save in tax by doing a package. Takes into account the common running costs of a motor vehicle, petrol of a car that does those certain kilometres. So just a handy chart just to get a bit of an idea. It's always good to crunch the real numbers, don't rely on this, but it gives you a bit of an idea whether you can save some money on car benefits.